Welcome back, folks. Let's take a look at the New York session from yesterday. Yesterday was Tuesday, 12th of November 2024. Now, while I'm walking you through this in hindsight, know that VIP traded this inside the community. Some students traded the long setup, others traded the short setup. Okay, we had a pretty amazing day. In fact, we've had a pretty amazing week in VIP just in the last couple of days. We are one of those, and I think the only group that is consistently pulling out 50, 60, 70, 80, 100 pip days. Most students are able to pull out 60 to 70 pips every trade, right? With my guidance inside of VIP. So we are having amazing success. It's a great community. Let me walk you through some of the trades that we've done in VIP. Okay, so we had an Asia short, right? We had another Asia short later on in the day as well. Okay, and I then had this. This was the long setup that I entered from early in the session. Okay, and I also closed out one of our Forex setups on GJ. So we're making a lot of progress in VIP. Now, my results are not typical, okay? Results are all based on individual's account size and the level of risk an individual takes, and obviously the discipline and the mindset, okay? So don't think that my results that I've shown you are typical. They're not typical at all. Most traders actually lose money, okay? In VIP, we're learning about price action, and students with my guidance are having a lot of success in understanding price action and then engaging with price on their paper or demo trading account, okay? Now, if we look at how this market has evolved throughout the day, if I just squish this down a bit, we've had Asia open and we've been consistently going down, and that's been a trend to the downside from last week. Okay, so Asia's open, we've continued to go down. London's open, we've continued to go down, and we've had short setups on the way down, as I've shown you in yesterday's trading. So let's have a look at how price action has evolved in the session. So this down candle that's taken out the low of the day, that's our bullish order block. Okay, we've moved up. There's a fair bit of gap there, and you can enter on this move down as early as 6 a.m. Okay, so that's 1 hour prior to the ICT kills, and 6 a.m. is a valid time to take entry so long as you have a valid setup. So this candle coming down into this fair bit of gap, okay, that's the 6:15 to 6:30 a.m. 15-minute candle is coming into this bullish order block that's taken all that liquidity on the left. So that's a valid entry. Okay, this down candle is also coming into this bullish order block. Okay, it's coming up into the top end of that. That's also a valid entry at that 6:30 a.m. candle. Okay, for an expectation of repricing higher. Okay, there is some risk here because we're still inside of this sell side imbalance. Okay, that is a premium PDR rate. So when we're pushing up into there, then that could hold price. However, we basically disregard that because it's on the low end of this range that we are currently in, right? So that really, technically, while it is a sell side imbalance where amateur traders may expect price to come up into there and look for a short setup, but that is the trap, right? Because if you know ICT and you have experience, you should know that because that is formed at the low end of this range from the high to where we are currently at that price point, that cannot be a premium, even though technically it is a imbalance to the sell side. What that says, fair value gap that's bearish, okay? And that's the trap where retail ICT traders will look for a short from there, expecting repricing lower, okay? But in VIP, we know the difference between discount and premium. So that's the risk that one may perceive. However, at this point in time, okay, we're expecting repricing higher. So any down candle should support price to move up. Okay, so that down candle there is coming to the high end of that bullish order block. We reprice higher, okay, with displacement. Okay, then at the open, right, 7:30, right, this is now all 7 a.m., which is the ICT kill zone, right? ICT kill zone starts at 7 a.m. So 7:30, what do we have here? We have institutional order flow entry drill. Okay, we're coming to this fair value gap. We also have this coming down into this, all this down move, that is a bullish order block on a high time frame. Okay, institutional order flow entry drill pushing up. Okay, now remember the video that I posted on Friday. So as we're pushing up, we're going through this high. Okay, so we're taking out sell side liquidity. So in my long that I've entered down here, let me find that's this one here. Okay, I've exited here at the high of the London session. Okay, taking out, when the market's taken out this sell side, okay, I've closed that trade out. Okay, so you can see that's the price at that point, 26.08, and that's my exit, and a nice profit based on that position size. Okay, from somewhere around the inside of here. Okay, I've entered somewhere inside of there. You can see 2596. Okay, so that's where I've closed out the position. Okay, but when you're looking at this, as I've said in my video on Friday, when you're watching this, you want to see and identify where could this fail, right? As we're approaching that 9 a.m., that 9:30, exactly what I said in my video last Friday. Go back and watch that video if you haven't. We spoke about a New York session short last Friday, I think it was the 8th of November. Okay, I said the exact same thing, that when the market's poised to go down, when you're in a bearish environment, then you're looking for, as the market's moving up into any premium PDRA, especially, right, fair value gap that's bearish. Okay, so sell-side imbalance will be the premium that we are moving up into, where we could expect repricing lower from. Okay, so make sure you go and watch that video, and that's what's occurred here. So students, as I said, have traded this up and some have traded this down, and some have traded both up and down, right? I traded this up, okay? Closed it out at the sell side, right? Buy side liquidity. Once, okay, we reached this swing high at 2608, okay? So I've gone through the bullish order flow that you could have used, okay, to trade this up, and again, targeting premium PDRAs on the left-hand side as the market's pushing up, or just like I did, wait for high of a session to be taken and close out the long, okay? Go back and watch the video I did for Friday, November the 8th. We had the exact same setup. These are recurring patterns, right? You've got to study, you've got to learn, you've got to practice, engage with price on your paper demo trading account so you can see these things in real time. This is what we're learning in VIP, but we are taking it to the next level, getting sniper entries at precise timings, okay? Now, let's look at this on the sell side, okay? How could we have identified a move down? So I also mentioned a lot of this in my video on Friday, November the 8th. We're pushing up. Now, something I want you to notice here, that these hourly highs are also important, okay? So this high has been created in the 8 a.m. candle, okay? The new hour starts that takes out that hourly high. Okay, this is now inside the 9 a.m. hourly candle, okay? So hourly highs are also important. So if you look at the time at the bottom, this is at 8:15 to 8:30, okay? That's the high for that hour. 9:30 comes and takes out the high of that hour, right? That is a very clear indication that that's a stop hunt into premium PDRA, right? And that's one way you could, on a smaller time frame, maybe 1 minute or lower, if you have access to a lower time frame like 30 seconds, can see that rejection. Okay, there'll be bearish signatures just inside of there after taking out this hourly high. Okay, but it's a lot easier than that. Okay, if you look at this down candle, you've got to look at what is order flow. Okay, every down candle should support price. So we're moving up, coming down. Okay, bullish order block, we move up. Okay, come down, bullish order block, move up. Come down, that down candle should support price and push price higher. We don't get that, right? That is your first clue that something's going on. So when you see this candle right there going through the bottom of that down candle, right, that has invalidated that down candle as your bullish order block. Okay, that also means that we are now below those up candles there. Okay, so if you look at, I'll just make a marking there, we're now below those two up candles, and therefore we have a change in the state of delivery of price at that point. Okay, we shouldn't get that low, right? We shouldn't get beneath this down candle if this down candle is a bullish order block to push prices higher, right? Now you look at time as well. Okay, what time they're going on? Okay, that's a new hour. Look at that brand new hour, 10 a.m., right? Expect changes at the new hour, right? If we're going to have a change in the direction, it's going to happen at a 30-minute increment or a new hour, okay? So at 10 a.m., we have clear indication that we now have a change in the state of delivery of price because now we're trading below both that down candle, which is the bullish order block that's now been invalidated, and below these two up candles, okay, which is our bearish order block, okay? This is our bearish breaker because we've made a new swing high, okay? And we're trading below that. So any movement up now is an entry to expect repricing lower, right? So any movement up, so this bar here goes up, opens, pushes up into this up candle and this down candle, that is a bearish signature, okay? And notice that it's also pushing up into previous daily low, okay? I've mentioned this before, but when a market's coming down and it's going through a previous daily low like this one, okay, then a push back up into the previous daily low is an expectation for repricing lower. So that's also the context that you need to have in the back of your mind. And that's what this candle, okay, is pushing up into after you have this candle that goes below the down candle and the up candle, confirming or change in the state of delivery of price, okay? So a lot of things going on there that are clearly indicating a bearish setup. Now, targets can be any of these swing lows on the way down, okay? Or the low of the session, which we did not get, okay? Or back to discount pricing, right? From premium back to discount, right? This is discount here and this fair value gap, okay? Plenty of range from that level, okay, to back to discount, okay? So let's break this down by looking at a 5-minute chart. It might be a bit easier for you to understand. It might be a bit clearer. So the left-hand side is very straightforward. Okay, you've got displacement, you've got down candles that are supporting price moving up. Okay, so here again, even on the 5-minute chart, we have institutional order flow entry drill, right? Coming into the first tick, right? As soon as that fair value gap is formed, large candle, any movement down into that is discount. Okay. We have movement up, down candle coming to this bullish order block, movement up, down candle coming to this bullish order block, movement up with displacement, down candle coming to this bullish order block, movement up, right? Order flow bullish all the way up. And you need to know where is premium, where could this fail, right? So this is premium, sell side, okay? This here is sell side imbalance, a bearish fair value gap is your premium that when you are coming up from below, you want to evaluate price, right? You got to look at the behavior of price at that point in time, okay? We can see rejections, right? And time's important. What time is it that we have reached up into that premium? 9:30, right? Go back and look at my Friday video, November the 8th. I said exactly the same thing. 9 a.m., 9:30, 10 a.m., the key times to look for reversals or pullbacks. Okay, so we have a movement up that takes out that hourly high, right? That 8 a.m. candle hourly high is taken by the 9 a.m. candle. Okay, coming into a premium PDRA on the left-hand side on the 15-minute chart and on this 5-minute chart. Okay, premium PDRA, this fair value gap, bearish fair value gap, sell side imbalance. Okay, now what do we see here? We see this is our most recent set of down candles, which is our bullish order block. Okay, so remember the order flow, down, up, all these down candles are supporting price. So this one should also support price, but it doesn't. Okay, what happens instead? We go straight through it, breaking structure. Okay, push back up into what? This is our bearish signature. Let me now clean this up a bit so we can see this more clearly. Notice also previous daily low, okay, that the market has come down into, pushing back up into to go down. That's the expectation. You've got to have that context as well. But you don't have to have it so it's that complex. The chart is telling you exactly what's going on based on order flow, right? Where are the bullish signatures failing? That's the important lesson here. If you can identify when a bullish signature fails at the right time, at the right PDRA, right, premium PDRA if you want to short, then it's a lot easier. So these three down candles become our bearish breaker, right? When we go through there, it's a bearish breaker because these three down candles precede this move up that creates a new swing high, okay? So when we go through there, this is now our bearish signature. Exactly the same as what I explained on Friday's video, November the 8th. Go back and watch it. These patterns repeat, okay? So as we're now pushing up into those three down candles, okay, that is our bearish breaker, and these two up candles, right, are our bearish order block. That's our bearish signature. Once the market pushes up into there, then we can expect repricing lower. Notice that it comes in exactly at the previous daily low as well, right, which should act as a premium array as well. Okay, now let's look at time. Time's important. What time do you think that is? That's new hour. Okay, look at the time down there. It's within, so the 10 o'clock, the new hour break structure, this push back up, three candles going up, okay, and at that 10, the next 15-minute candle, right, this is inside of the 10:15, 10:30 a.m. candle. We form the entry to expect repricing lower right there now, short, okay? Target can be back to discount, right? So we're going from, let's understand this, very important, we're going from discount, right, to premium, okay, and then from premium, right, back down to discount, okay? That's how students in VIP have been able to trade this up and trade this down. The difference between what I'm showing you here and what they see is that they have my guidance, okay? We talk about these charts before they form, okay? And they have teachings to know exactly what to look for and at what time to get those sniper entries, okay? So students have been able to pull out 50, 60 pips every single trade, right? So we've had setups to go short, okay, all throughout yesterday. And then we've had setups to go long and short. And students in VIP have captured every one of those swings with my guidance. That's the difference between what we learn in VIP, okay, and what I publish publicly on YouTube, okay? You have all the information here on YouTube as well to be able to understand price action, okay? I provide you educational videos every week, as well as my guidance on directional bias, okay? But in VIP, we take it to the next level, right? And they get to see these setups form before they occur and get the opportunity to engage with price on their paper demo trading account with my guidance, okay? All day I'm with VIP. We're having a lot of fun, and we are talking about the various setups and targets and bias for each session, okay? And the key timings to look for these setups and how the setup should form to take those sniper entries, okay? So VIP is a whole nother level than what I'm sharing here on YouTube, okay? And it's a community of like-minded people where we are collectively learning from each other, okay? Hope that video is useful. I invite you to join VIP. The link is in the description below. I will now talk with you in a future video.